Is the market going into the toilet today? Hey everyone, Meet Kevin here. Well, to help determine whether or not the market will be going into the toilet today or even this week, it is helpful to analyze what destroyed our market last week and compare to this week. Yes, we are going to start by looking at the good old 10-year treasury. In fact, I'm going to go ahead and just hide myself for a moment because this is what matters. This is the madness that we had last week, right here, the 25th, when we had a disastrous Thursday, when we hit these peak prices. Peak sustained prices. We had short-term peaks within the day of even as high as breaking 1.6 on the 10-year. We have settled it down. We settled it down on Friday. We settled down substantially in futures. We're pretty stable right now, around 1.43% on the 10-year. This is good news. This is better than potentially high settling. Right now, we're lower than where we were Thursday. We're lower than where we were Friday, and we've got some stabilizing happening. Dollar is stabilizing. It's not free falling like it was. That's good. We've got oil prices sustained on talks that stimulus is coming. Obviously, third stimulus package coming. We've got the Johnson & Johnson vaccine. We've got a lot of things to be excited about right now. Now, Bitcoin, on the other hand, had a sharp 20% sell-off, but I have to say, Bitcoin also somewhat recovering right now. In fact, if we go ahead and pull up Robinhood, we'll see we had this pretty dang solid sell-off here from a high of around 57,400, almost 57.5, down to this low over here of about 45.3. But if we go into the day now, we're at about 47.8, and we're rising into the day. So it looks like the market so far is expected to be enthusiastic this week. Some of those treasury bond, auctions that we saw last week, we're not expecting to see those issues get repeated this week, especially now as the market is coming to terms with, yes, there's going to be another round of stimulus. Yes, that means the money printer is going to be running more. Now we've priced that in. Are we good? Can we get back to normal now? Well, let's see what the stock market futures are doing, and then let's talk about some earnings to pay attention to, as well as some stocks that I'm personally thinking maybe it's time for a transition in. Let's go ahead and jump in. So, first things first, let's go ahead and look at the futures. Here's what we've got. And this isn't even really the futures anymore at this point. Futures were green. Right now, we are already in pre-market trading. It is about 6 a.m. Eastern time or 3 a.m. Pacific time right now. We've got Fisker selling off a little bit after a massive rally last week. Keep in mind, we might continue to see a bit of the sell-off at Fisker as peak media fades. Remember last week they were on Fox, CNBC, and they were on CNN, so they really hit the media circus, or I should say, well, both, I guess, media circuit last week, and I wouldn't be surprised to see a lot of this enthusiasm fade from Fisker, especially since they're probably about 1 to 2 years behind Lucid. The CCIV merger. This is really it that we have for negative right now. Fisker, Bed Bath, and Arcturus is really flat here. We've got Walgreens pretty flat as well, but if I now go ahead and sort by gainers here, look at this. We got CLII up 12% in the pre-market here. AMC 11%, and potentially gaining here in this pre-market rate. Yep, here we go. In the pre-market, we got a really nice sustained gain here with AMC. pushing nice and straight up in the pre-market hours. We'll see how this develops, obviously, through the rest of the day. Sorting through the rest, we got Zom, ChargePoint, Plug Power, Microvision, Matterport up 7%, Ebix up another 7%. Really, almost feels like a lot of the things that were selling off last week coming back here strong to open this week up. We've even got Tilray, we've got Cannabis, Palantir turning around over 25 again. We've got Churchill Capital up 7%. This is why, and it's one of the things that I drill into us in the Psychology of Money course, is never ever squander a red day in the stock market. If you haven't checked that out yet, make sure to use that coupon code HODL, link down below. Not only can you join me in the private live streams, but you get the lectures, lifetime access to those, and any new ones that I add. But obviously, you get a really good community as well that'll help you not squander the red days. Buy on those red days. We got Nano Dimension sitting at 1050, still, a far cry from where we've been at some of the crazy highs we've seen. Some of this has to do with a lot of outflows leaving ARK Invest, for example. But there's a lot of enthusiasm to see money flowing back into ARK Invest here, especially after Cathie Wood also gave her bullish thesis again, reiterating her strategy for investing in tech and innovation and saying that, look, when these things sell off, that's the time to buy. Tesla still, though, under $700. For me personally, Tesla under $700, very juicy target. Even though I love Etsy and I love Enphase as well, I'll be targeting, out of these three, I would be targeting Tesla under 700 as something to add to. And Enphase under 180, I would add to that as well. Etsy right here at 225, that's about peak. Now, in terms of some of the stocks that I've actually kind of been putting on this list of that we'll call them the naughty list, I have to admit, I've been looking at some stocks that I don't know that I really want to be in forever, but some stocks that I might want to rotate into some of my favorite tech plays or my innovation plays. And so that might mean it might be time soon for me to cut ties finally with some of these big winners like and I know when I say big winners in these names, it's like, really? Those were big winners? Yeah, they were big winners as well. But they were more part of the conservative part of the portfolio. Home Depot, Lowe's, Target, even Zoom during, obviously, COVID. You know, we'll see. I mean, Zoom reports earnings today, but we might be getting to that time where does it make sense to maybe reduce my position in those or just close out my position in those and transition that over to getting Tesla under 700, for example. I'm a little over-concentrated in Tesla, but obviously investing in some of the other growth opportunities as well that I'm excited about, whether that's Enphase or some of the other EV plays that exist, like, for example, NIO, who's reporting earnings today. NIO, we will be reporting earnings into a euphoric market, which is good. Today appears to be opening as a euphoric day compared to what was last week, which is very potentially a very welcomed day. And this is good. When we have earnings on days like today, usually companies can get rewarded very handsomely. Now, NIO at the moment, Tesla's up 3%. NIO at the moment, in pre-market hours and pre-market trading here, is trading actually up about 5.9%. This is another reason you really want to be careful. You know, people regularly say, you don't want to catch a falling knife on those red days. Yeah, you kind of do, because your targets, when you hit your targets, like $45 on NIO, those are usually there for a very short period of time. Like, the downs can be a blink of an eye. And then usually you look back, oh, darn, should have put in more money then. Yeah, I mean, that's the way it works. But anyway, NIO at 48.45. Still, I mean, there's a huge catalyst here today for NIO. NIO reporting earnings today along with other companies. I think for NIO to have a big pop today, NIO's really going to have to prove their margin. Right now, their margin's somewhere between 12 to 14.5%. If they can bump this to 18% plus, whew, I have a good feeling that NIO could move positively pretty strongly. Now, if they come out and their margin goes down, if their delivery growth rate slows, those are going to be risk factors, as well as updates on the battery swapping technology, something that a lot of people are skeptical of, though many people are very bullish of. I've got a big position in NIO, about the same size as I have in CCIV. And these are sort of my alternate bets next to Tesla. So we'll have to see how earnings come in today. But NIO, big day for NIO. So watch that one. I'm not going to be playing anything short term on NIO, but it's definitely one I want to see for. I want to see what kind of change in trends are we seeing over at NIO. And who knows, if we get a miss, it's going to depend if I'm going to add more to NIO, depending on how bad the miss is. If we get a beat, I'm not sure that I would add after the beat, because I think the stock's going to move quickly. I think we can go from $48 where we are in pre-market now pretty quickly back to $60 a share, especially since this is such a large catalyst event. Could be a big tendy printer, so to speak. Zoom reports today. I have to say, Zoom is one of those that I'm like, man, if they just beat big, which I don't know if they will, we're going to have to see how much they can really convert. Though Zoom tends to price on guidance, and I think Zoom's going to come out and say something like, yo, we don't really think that many new users are continuously coming to us. That could be bad for Zoom. We could see a sell-off at Zoom. If we see a big beat, though, at Zoom, and Zoom ends up doing some kind of meteoric rise, that might be an opportunity for me to say, okay, Zoom, we've had a nice ride, time for something different. Lemonade, on the other hand, Lemonade is a company that pretty much the only thing people say about it is, Lemonade, overvalued company. Look, it's expensive. It's an insurance company that is betting on millennials becoming lifelong customers. Their expected value for these customers is not going to be realized for probably, I mean, at least the next 2 to 3 years, but realistically, the lifetime earnings of these customers, especially the millennials that they attract at Lemonade. If you haven't checked them out yet, go to lemonade.com. That's not even an affiliate link. But they've got great products from renter's insurance to homeowners insurance, pet insurance. I think they just started life insurance, which is actually different from the life insurance that I use. Life insurance I use is at metkevin.com/life. Check it out. It's pretty easy. You can sign up without talking to anyone. But Lemonade, really great insurance company. They haven't checked out their life insurance products yet, but I know they use artificial intelligence to help. Essentially, I mean, look, a lot of companies use AI. I feel like at this point that's almost a buzzword. But Lemonade really tries to sign you up for an insurance plan using complete AI service, which basically means you're not talking to a broker. They try to get you the best price. They and they take all of the data in from all the actions that you take, like whether you read the terms of service or not. They take all of these factors into account, along with hundreds of other signals that other insurance companies don't, to risk, okay, who's potentially the most risky pool. And in theory, I don't say this part, but in theory, they could just offload the riskier people over to their reinsurance companies. I'm not sure if they can divide out their customers like this, although it would be pretty brilliant if they can. They do use artificial intelligence, though, to risk their pool. And they do use reinsurance for about 75% of their portfolio, so why not just offload the riskiest the riskiest three-fourths, so to speak? I don't know. That's what I'd be thinking of if I were Lemonade, so I wouldn't put it past them to do that. We do have a Workhorse reporting before the bell, and we've got Berkshire Hathaway reporting before the bell. Can't say I'm optimistic about Workhorse. I mean, I know Workhorse is halved, and it looks like a value play, and I know that we've got ARK Invest, who's added to them. They're at $17. They're up 5% here in the pre-market. Sure, maybe we might have a beat on earnings. Who knows? That miss in that USPS contract, though, it's a big concern. And it also concerns me for just commercial electric vehicles across the board because, look, if the USPS isn't giving their contract to electric vehicle manufacturers, that does not send a good signal for cost parity for the rest of the EV industry, at least in the commercial space. Consumers, I think, are more willing to buy an electric vehicle, even if we're not at cost parity yet compared to an internal combustion engine vehicle. And that's likely because consumers value going green and value the transition to energy efficiency more than a business does, because a business has to look at it and go, look, what's my break-even cost? Am I going to make money on this decision? A consumer doesn't necessarily have that same motivation. They have other factors. We call them sort of the invaluables, like how much extra are they paying just to be green? It's kind of like when the Prius first came out. I bought one, don't get me wrong, but I bought it as a real estate agent because it was a green car and that was the thing to do in California. I was following a trend, right? And in my opinion, the Prius was really just a dressed up Camry with a battery in it that they were selling for like 13 grand more, and I doubt the battery cost 13 grand or the hybrid system in total. So in other words, I knew I was paying a green premium at the time for that. Obviously, commercial vehicles will electrify in time, but it might take longer, and that is a negative signal, in my opinion, for Workhorse as well. We do expect Jerome Powell to be talking on Thursday. That could be a potential market catalyst. We've got the Fed Beige Book coming out on Wednesday, the day before. Unemployment data coming out on Friday. That'll update our unemployment figure, that is the percentage. So not just unemployment claims coming out on Thursday, but the actual unemployment rate will update on Friday. Oil prices are up, and folks, hopefully, we'll see. Hopefully volatility settles down a little bit this week, and we get a little bit more of a relaxed environment. So far, it looks like the volatility index will be down, the VIX. We'll see, though, folks. I wish you good luck this week. Obviously, I'll be streaming throughout the week. Thank you so very much for watching, and folks, we'll see you in the next one.